In a surprise shift in monetary policy, the Central Bank of Nigeria has lowered its benchmark interest rate for the first time in 5 years. The monetary policy rate was cut by 50 basis points from 27.5% to 27%, as announced after the bank's 302nd Monetary Policy Committee meeting held on the 22nd and 23rd of September in Abuja. Many analysts had predicted the Central Bank of Nigeria was going to reduce key rate, and that's exactly what the Apex Bank did.
The committee's decision to lower the monetary policy rate was predicated on the sustained disinflation recorded in the past 5 months, projections of declining inflation for the rest of 2025, and the need to support economic recovery efforts. The MPC also adjusted the standing facilities corridor to improve the efficiency of the interbank market and strengthen monetary policy transmission. The committee further introduced a 75% CRR on non-TSA public sector deposits for enhanced liquidity management.
CBN Governor Olayemi Cardoso, who briefed journalists at the end of the 2-day meeting, said the decision was informed by consistent disinflation trends and stronger macroeconomic fundamentals.
The MPC expressed satisfaction with the prevailing macroeconomic stability, evidenced by the improvements in several indicators. These include the sustained disinflation, improved output growth, stable exchange rate, and robust external reserves.
The committee also adjusted several other monetary policy tools.
It particularly noted the increased momentum of disinflation in August 2025, being the highest in the past 5 months. This deceleration, underpinned by monetary policy tightening, exchange rate stability, increased capital inflows, and surplus current account balance, have helped to broadly anchor inflation expectations.
The MPC also noted the continued resilience of the financial sector, disclosing that about 14 banks have met the regulatory capital requirements.
The committee further noted the successful termination of forbearance measures and waivers on single obligors, which has helped to promote transparency, risk management, and long-term financial stability in the banking system. The MPC reassured the public that the impact of the removal of forbearance is transitory and does not pose any threat to the soundness and stability of the banking system.
The committee particularly noted the significant improvement in the performance of the oil sector, which grew by 20.46%.
A positive development that is expected to further bolster foreign exchange reserves and sustain stability in the foreign exchange market. In this regard, the committee commended the efforts of the federal government and called for continued vigilance to strengthen the momentum of security across the country in order to increase oil output and food production.
Cardoso disclosed that while the global economic outlook remains cautiously optimistic, monetary policy in Nigeria would continue to be data-driven and proactive, particularly in light of slow global disinflation and ongoing trade tensions. The next MPC meeting is scheduled for November 24th and 25th, 2025. Okbayemi Owoshini. TV360 News, Lagos.